Good morning, everybody. It is Dennis, and we're back on Wednesday, February 19th, as always, going over the distributions for YieldMax and for Roundhill ETFs. First up, of course, we have YieldMax with Group A distributions coming in hot this week with new funds like SDTY. So let's go ahead and go over YieldMax first. Let's go ahead and go onto their main page where we can go ahead and take a look at all of their funds. So starting off with the weeklies, as always, on their charts, we can see that QDTY is their new fund as well, QDTY. That one has not paid and will not be paying for this week. We have SDTY, which is, I'm pretty sure, the first payment we're seeing from the YieldMax S&P 0DTE covered call ETF. This is pretty much trying to match what QDTE and XDTE are trying to do in RDTE, so they're trying to make their own funds with the similar idea. So for their first payment, they're going to be paying $22.21. And you can see the return on capital is 100%. This is a great addition that they've added, by the way, into this. The distribution screen is the ROC. For GPTY, which is the AI and tech weekly pair, we have 32.58, and again, 100% return of capital. We have LFGY, which is a crypto and tech, that's paying 57.39. And we're getting 58.86 back in return on capital. We have YieldMax, one of the funds that I do own for this group distribution, of course, the weekly that I do own, and that paid 18.52, and will be returning 72.51% of the payments in return on capital. We have YMAG that paid 13.69 and got 39.02% return on capital. And of course, we go into the monthly payers. We have TSLY, another ETF part in this group that I do own. Giving us a low payment of $57.93, unfortunately. But we're getting 93.03% return on capital. But $57.93 is quite low. I know Tesla, the underlying, has dropped recently, and they lost a lot of money on their lower part of their option trades. So it kind of makes sense why we got a low payment, but I'd like to see this number go back up in the next month. Assuming, of course, that Tesla goes up as well. Then we have Crash, the reverse of Tesla, which got 38.10, and it was a 12.68% return of capital. So almost 90% of your money was not return of capital. Then we have GUI, that was 38.77, and that was 0% return on capital. We have YBIT, and then that was 0% return on capital and paid $55.06. Also, GUI is another fund that I do own for this week, and that paid $38.77, which is a good actual distribution. I think it's actually higher than the last month, which we're going to check on our little spreadsheet in a second. We have OARC that paid $42.69 and was 93.84% return on capital. We have Zomo, which was $25.41 and paid 0% return on capital. We have Snowy, which was $92.10 and was 89.86% return of capital. We have TSLY, which was $16.19 and was 47.33% return on capital. And of course, we have at the bottom, we have FIAT and FIVY. FIAT paid out $1.90 and FIVY paid out $1.12. All right. Let's go ahead and take a look at our chart and see how much we're getting paid, or I'm getting paid for this week. So looking at TSLY, we increased our share count from 450 to 461, so by 11 shares. And we got the payment of $57.93 compared to $71.70 from last week. So we are under the $300 mark once again at $267.18. If you take a look at previously, we had under 300 in November, once, twice, 3 times, 4 times. But of course, this is when we had 300 shares. We're at 400 shares now. So the last time we were at 400 shares and had under 300 was in November, where we got a payment of $59.86. And so far this is our second lowest payment since that reverse split. So $57.93, second lowest payment since the reverse split. Since then, we've only gotten down to $59.86 and stayed at lowest around the 60s. Or actually, oh no, this was before reverse split. I was going to say we had a 40s, but that was before a reverse split. Now, let's also take a look at GUI. GUI is at 334 shares. So we added 10 shares on top of that as well. And we got the higher payment of $38.77 compared to $33.24 of last time. As you can see, they've been paying around the 3 mark pretty consistently, which is pretty good. We got 35, 37, 37, 71. Then we got 33, 24, 38, 77. And that gave us a total of $129.88. Not too bad, not too bad at all. I will take it. It's an increase from the last month. Of course, we did also have share increase as well. Now let's look at the weeklies. So we have YieldMax. YieldMax paid us for this week, week 3. We had 584 shares. We did not add any shares from the week prior. So we had 584 shares, but we got a higher payment of $18.52 compared to the $15.03 from last week. But it was lower, of course, than week 1 of $19.44. But we got a payment of $108.29 compared to the $87.88 from the week prior and the $110.51 from the week before that. So, of course, the share count addition did help us to get a little closer to the 110 of that 1944, and that is a 23.22% increase week over week from the week 2 payment of $87.88. Okay, let's go ahead first, and also before we go to Roundhill, take a look at how close we are and how much we're looking at to have in grand total wise. So as you can see, our grand total for January was $1,017.63. All the monthlies have paid out so far, and we only have, or the ones at least I have on my portfolio. But we do still have one more payment from YieldMax, and if we're able to get another 18-cent payment, maybe even 17-cent payment, we could pull off almost $400 earned from YieldMax without needing up to 5 weeks to get at 306 or above, at 306 or 400. So with 4 weeks, if we're able to get another 18-cent, 17-cent payment, we'll be able to get at $400. If we add some shares and we get another 15-cent payment, we might also get to $400. But let's hope that they give us another 18-cent payment so we can get to that $400 mark. And if you could do the quick math, you could see that if we get to the $400 mark, we'll be beating last month's payment month over month by almost, what is that? Well, that'll be like $50 because this would be at $1,068, or actually no, it would be $1,168 if you add the $400. It would be $1,168, so it would be beating last month's payment by $150, assuming of course we get $400 from YieldMax. So it'll be quite nice to see, seeing that we are still growing month over month with our YieldMax funds, even while contributing less money into them with our new strategy that we are running, which we'll go over in a sec once again if you have not watched the video. But before that, we could take a look, of course, at Roundhill as well, where XDTE paid us $22.01. We have QDTE that paid us $24.62. We have RDTE that paid us $20.26, and YBTC that paid $28.20 or $28.12. Of course, YBDC, RDTE, and XDTE I do not own. I only own QDTE, and from that I received $24.62. So we go ahead and take a look at that. We could go ahead and scroll over to our new spreadsheet, and we can see that for the week 3 payment, we did get an additional 1 share to 230.8611. If you guys do or do not know, I do drip or reinvest back in the dividends automatically for QDTE because they're not part of the YieldMax wheel strategy that I'm currently running. So unless I have extra income to put in, most of the time it's just wheeling its dividends back into itself. So the 57.57 dividend from last week was put back into QDTE to give me 230.86, and that gave us a distribution of 24.62 and gives a total of $56.84, or roughly down 1.26% week over week. Anyways, we're staying above the $50 mark, so it's quite nice to see. And of course, if you compare this to YieldMax, it is at double the cost and half the amount of shares, and receiving half amount of dividends. So if we took the same dollar amount and put it into YieldMax, we would be receiving $200 instead of $100 a week. But of course, QDTE does have stability as well, which is the reason why I continue to reinvest into it. And of course, it is trading on the QQQs. Down the line is the QQQ. So for me, having one that's YieldMax, that's mostly around the S&P funds, and also is diversified in YieldMax, And then one fund like QDTE that's in QQQs, and of course I myself trade S&P, so I think I'm quite nicely diversified in a sense. But currently our total sits at $167.17 from QDTE. If we get another $50 payment, we will be once again at the 230 mark that we had in January, but that was with 5 weeks of dividends compared to 4 weeks of dividends in February. So, like mentioned before, we have a new strategy. If you do not, or we do or do not know for what we do with our dividends, we are going to be reinvesting only the margin that we take out based on the dividends we have. So we go ahead and add our dividends up really quickly. We can see we have 267 plus 129. If we go ahead and do the math for that really quick on my phone, look at it, 267 plus 129, that's $396 from just TSLY and GUI. If we go to YieldMax, that will be 108 additional, that's 504. And if we go to Roundhill, that's 5684. We'll just do 56. That's roughly $560 in dividends. What we're going to do, of course, with our new strategies, we're going to go ahead and take that 560 dividends, and we're going to go ahead and split it at 50%. We're going to take 50% of it, the value, and take that out in margin. So we're going to take around $250 in margin. That $250 margin, $100 worth of it, like $125 worth of it, is going to go into TSLY. We're probably going to put another $100 into GUI. And then we're going to take $50 worth of it and put it into JEPQ to buy an additional share of JEPQ. You might be thinking, why am I buying JEPQ? Well, the reason I'm buying JEPQ is because it gives us stable growth. If we take a quick look and type in JEPQ, let's not do that. Let's go, or it's going to continue. Okay. If we look at JEPQ, I wanted to look at it on Yahoo Finance, but it's fine. If we take a look at JEPQ, we can see our dividend yield on average is 9.51%. And we're getting a consistent 50, 45, 50 cent payments from JEPQ, as well as growth. As mentioned before, I'm switching my strategy around. I'm saving the cash. The reason I'm taking margin and investing margin is because I'm saving the cash to go ahead and buy option contracts, to which I'm able to earn more income, as well as be a little bit more independent with my trades, besides having to rely on YieldMax. So I'm able to grow my income by at least around $400, $500 a month every contract I purchase on the S&P, as well as give myself growth opportunity with estimating that the S&P continues to grow at a nominal rate or an average rate of 8 to 10% return. So we take into 1 year, it's up 11.58%. On the year to date, it's up 3.55%. Max time, it's up 16.53%, while yielding a 9.51% return. So that's why I'm looking to invest into JEPQ, just diversify into it to allow myself to have a safety net. And of course, we also have dividend growth as well, which is also nice to see. So if you bought at a cheaper price, your dividend distribution would have grown and not fallen in value. So there's little to no NAV erosion from JEPQ. You have dividend growth as well, and just in the long-term sense, it is the safer position to play. Of course, I mentioned in my previous video, which will be linked at the end of the video, I'm not looking to sell out of YieldMax. I'm not looking to sell out of QDTE. I'll continue to get these dividends from, as long as they continue to pay me, I'll continue to receive the dividends. I don't mind it whatsoever. I will no longer be reinvesting cash into it or any option income that I earn, because there's just no really positive benefit for me to do so. I could beat most of these funds, or at least perform a lot better on the growth side, so no NAV erosion, and as well with the dividend side or the option income side, because I'll be able to earn myself roughly $400 to $500 a month with roughly $8,000, $9,000 investment into an option contract. If you go ahead and do the similar with, let's say, YieldMax, if you put $8,000 to $9,000 on YieldMax, we could see that if we put $8,000 to $9,000 on YieldMax, we're making roughly $100 a week on a good month, which yields you $400. But it does experience NAV erosion somewhat. We're currently down around 6% with YieldMax, and I know it outperformed the S&P. While with my fund or my strategy, I'll be able to have growth as well, because I'm in the S&P, and like I said before, based on historical evidence, 8 to 10%, that will yield me a good return on my lower contract as well as a good return on my upper contract. And if I take a little bit more of riskier trades, I can even beat the $400 to $500 a week. I can make $400 to $500 a month. I could beat that by getting $200 in a week or $300 in a week, depending on the trade I take and the risk I decide to put on myself. So of course, more risk and more return. So that's just my outlook. That's the dividends we're receiving for this week. Once again, thank you so much for watching. That has been me, Wednesday, February 19th, for the dividends and distributions for distribution group A. And yeah, hopefully you guys earned some good income for this week. Thank you so much for watching. I will see you guys on Friday. Be sure to like and subscribe. And thank you for all the support you guys gave on the last video. I'm talking about my strategy and why I'm planning to do what I'm doing. And yeah, that's pretty much it. I hope you guys enjoy your Wednesday and Thursday, and I'll see you guys on Friday.